Now we must consider the second prospect we have on this screen, that is called profit and loss account. This prospect is made up of three parts. The first of them is called the sales. Sales are all the goods that we have sold during a year. In this case, we can write down here 35,000 pounds. That are the value of all goods sold by us. Have we had any claim from customers for faulty or poor quality goods sold by us? Yes, we had some of them, and we had to grant a rebate or a discount of £200 that are subtracted from the gross amount of sales, and the outcome of this transaction is 35,800 pounds. These are the net sales. To sell goods, we must have bought goods before, and we have a second part of this prospect regarding just this problem. Do we have opening stock? Opening stock means that we have already in our warehouse goods to sell, but we haven't yet bought. That means that we have to buy goods for the first time, and the amount of all the purchases during this year is £20,000. As we have seen in the sales, we can have returns outward as well. That means that some goods bought by suppliers has resulted in poor of quality. So we have claimed for a rebate. In this case, the amount of these returns is £400 that are to be subtracted from purchases. And to have goods at our warehouse, we need to pay carriage for transportation. Carriage in words are transportation expenses. In this case, £800. And have we sold all the goods we have bought? To do this, we must make inventory. We must check it in our warehouse, and we have discovered that we have goods unsold. Closing stocks is just this, and the value of these goods remaining in the warehouse is £3,200. So £20,400 are all the goods at disposal to be sold. These 3,200 are the goods that haven't been sold. The cost of the goods sold is 23,600. The difference is the gross profit. In this case, the gross profit is 11,200. But the company has to pay and to carry other expenses. We have £3,000 for wages, £400 for light and heat, 300 for stationery. We have £1,200 for telephone. Carriage outwards are 2,400. Advertising, £900. Overheads, that is general expenses, are £500. Discount allowed, 200. Motoring expenses, £900. And finally we have interest payable. And interest payable we must explain a little bit further, because we have borrowed £80,000 from the bank as a mortgage, so we have to pay interest. Considering an interest rate of 10%, we will pay interest to the bank for £8,000, and the total amount of these expenses is 17,800. If we subtract this figure from the gross profit, we have a negative value of £6,600. So at the end of the year, the outcome, the result we have here is not a profit but a loss. This situation is pretty common in the first year of the life of the business, because the business is not yet well known, and the market share is pretty low.